Cost for health insurance is going up yet again, and in particular, people that are retirees or self-employed or aren't on Medicare yet don't have group coverage are going to feel the pain the most. And so we're going to talk about it in today's show as what is going on specifically for the people watching this podcast. What is going on for those that are retired or don't have group coverage and need health insurance? Because prices are going up. In fact, according to the Kaiser Family Foundation, an increase of more than 75% in premiums on average for enrollees, 90% increase for many rural areas. Let me bring in my co-host, Tony. Tony, you grew up in a rural area, so you know what that's all about. But I'm putting the link down below for people that want to read where I got that quote. But fundamentally, Tony, what's going on is the cost for health insurance is going up tremendously. And it's not just because prices are going up as they normally do with inflation, it's because we've had some changes to the way the government Affordable Care Act subsidies are going to be distributed starting in 2026.
So
We've talked about it in a previous show, so I'll put that up there for those that haven't watched it. But I want to get deeper into what's been happening and some changes that happened in September of 25.
So put those numbers back up for a second. An increase of more than 75% in premiums on average,
Yes,
and
yes,
a 90% increase in many rural areas.
yeah.
Wow,
So
that's huge. I
it
thought I
is.
heard like increases were like 9%. That's
Yeah,
crazy.
I think I've seen 20% as like the cost of the plans. So so let me explain how this pricing works.
Sure.
Insurance companies, they price out the cost for an individual health insurance policy. And those get increased every year with inflation. And I think the numbers are around 18% expected increase from 25 to 26, right? But on top of that, what's happening is the government Affordable Care Act subsidies, the enhanced subsidies are being eliminated. They're supposed to sunset in 2026. And so that is going to happen unless Congress changes in the next 30 days. So those are going to go down. The subsidy is going to go down. The prices are going to go up. And that's why you can get something outrageous like a
Oh,
75% increase in premiums.
wow. Yeah, not
So,
good. I mean, even a 10% would be crazy, but 20 to 90%,
right.
yikes.
Everyone's going to feel it, even those getting subsidies. But a lot of people are going to be losing subsidies, particularly those listen to this podcast, because they typically are older. Their cost for their health insurance is higher because they're older. They might be in their early 60s.
Mhm.
And on top of that, if they are retirees, they don't have group coverage. So group coverage people don't have to worry about this. This is people that don't get insurance through an employer.
Sure.
And they tend to have more income because they may have turned on Social Security or they might be taking IRA withdrawals, all count toward this income. So the subsidies are based on the federal poverty levels, and I put the link below if you want to see what those are. But
Sure.
I highlighted a married couple. Let's just say a married couple. The federal poverty level in 2025. The 2026 numbers are not out yet, but they're very close. They'll be very close. The poverty level is 21,150. So if you make more than 400% of the poverty level, you don't get any subsidy going forward. The way it works is the lower your income is, the more the healthcare subsidies are. You pay less for health insurance. But I want to be clear about this, Tony. When you look at getting health insurance through the healthinsurance.gov, in the case of Florida, we don't have a health exchange, but in certain states, they have their own exchange, like California or Connecticut or something like that, that you go through your state
Sure.
health insurance
Yep.
exchange. But the premise is still the same. You go online, you shop, and you see what does my health insurance cost. Oh, okay, I'm a 60-year-old. The cheapest plan is $600 a month. You say that's unaffordable. Then you look at the federal subsidies, and if you qualify, in the case it's been everyone can qualify, even if you have more than 400% of the poverty line, you get a subsidy. So your price is still the same. You're still paying $600 for a month for your health insurance, except you're paying part of it, and the federal government tax dollars from people like you and I are also going toward the health insurance company. So the health insurance company is still getting their price. They raise it 18%, and now the cost is $700 a month. They're still going to get that. It's not going to all come from the end user. It's going to come from the end user plus the federal government for the subsidy. So
If you qualify for a subsidy, but what you're saying here, according to the information, if I've got this right, if you're a married couple, and you file jointly and you make over $84,600, you don't get any subsidy
correct. If you make 84,601
as a couple.
you would get zero. Now this year
Wow.
they expanded it, but next year the subsidies, which started in COVID, the enhanced subsidies
Yep.
were for COVID because people weren't working, so they extended them through 2025,
Yeah.
and now they're set to expire. And they're going to expire unless something changes. So people that are making more than 400% of federal poverty will get zero, and it's a cliff. So in the case that I'm using 2025 numbers, if a couple makes 84,601, they get zero subsidy from the government. They're paying full price, whatever it is, for health insurance. So you could see how, well, 84,600 is a lot for a married couple. Not really.
No,
Not really.
not nowadays, not with costs of living.
And if you take a married couple that are 62, let's say, um, their health insurance, the cheapest plans are going to be well over $1,200 a month for the
Oh, yeah.
cheapest plan, right?
Yeah. Yeah.
So all of
Plus,
a
they don't
sudden, it's like
qualify for Medicare yet, so
they
that's
don't,
not gonna
right,
help. So
right,
you're stuck in that, zone if you don't have an employer-sponsored plan.
right.
Right.
And so people have not, when I started in this industry, I've quickly learned that for retirees, one of the biggest, if not the biggest concern was health insurance costs. People were delaying retirement so that they can continue health insurance through their employer. People were working until 65 so they can have an easy transition to Medicare. The ACA subsidies mitigated some of that by reducing the cost. It didn't reduce the cost, it just reduced the out of pocket for the individual.
Sure.
And that was the interesting part was they they really didn't feel the pain because the government was subsidizing it. Now people are really going to feel this pain if nothing changes.
Sure.
But there were some changes in September of 2025 that are potentially going to help mitigate this, not an extension of the credits, because that's cliff is still there now. According to what's happening right now in 2026, there's going to be a cliff. So people need to be aware of that. But Health and Human Services added a few options to help. And I'm not sure if it's going to really do enough, but let's go through those because this is all new.
Yeah, I didn't know that they added something to try to help out.
Have you heard of the catastrophic plans? They were known as copper plans.
I've heard of it. Yeah.
Yeah. So there's different levels with health insurance with the government ACA. And by the way, you can't get health insurance outside the ACA and get a subsidy. And the
No.
plans outside of the ACA, healthcare.gov plans, are really just as expensive, if not more. So people that aren't on group insurance through an employer are going through the ACA to get
Yeah.
coverage.
The
And that they
exchange or
have,
the ACA,
right,
yeah.
right. And those have to cover pre-existing conditions.
Sure.
So, right. So they're definitely more expensive than they used to be before. But they had different levels: gold, silver, bronze, right? Gold being the most expensive, bronze being the least expensive.
Yep.
But there's another level which are called catastrophic. I call it copper because it's one below bronze. And those were only available to people under age 30. So my clients are mostly in their early 60s, late 50s, so they never qualified. So it was
No.
never a discussion point.
Yeah.
But
That's why I
what
didn't
is
really know about it, because when my wife and I looked at those plans once just to see how they compared with what we were being offered at work. Yeah.
right? So you can't get them unless you're under 30. However, in September, that the language on that was changed to say that's going to be expanded to anybody. So, as an example, an individual, let's just assume these are 2026 numbers. These are 2025 numbers. They have more than 400% of the federal poverty level, which would equal 58,320. So if a single person is making 58,000, they don't get a subsidy in the new world. However, they could attest that that's unaffordable because $12,000 a year premiums represent a huge portion of my income. And it's like 20% of my income going to health insurance. They could attest to that and now qualify for the copper plans, which will be cheaper, but I just don't know how much cheaper. We're
Sure.
going to find
And
out
so
the
they,
pricing.
regardless of age, if they meet
Yes,
the income income
right,
limit, then
right,
it's no longer an age limit, it's an income limit.
right. Because if you're
So,
over the 400% poverty line, which a lot of people are,
yeah,
they don't get any subsidy whatsoever now going forward.
period.
That those
Yeah.
are going to stop.
Yeah.
However, if they say, "Hey, I'm going to uh, show my income and attest that, listen, yeah, I know I make more than 400%, but look at these prices. It's 20% of my income. It's 10% of my income. That's just too much." They can qualify for a copper plan. That's that's new, right?
Okay.
And I think that should help a lot. The thing that I don't like about that, Tony, though, is yeah, a copper plan might be cheap because inexpensive each month, but the deductible is going to be huge.
Yeah, it's going to be
So
very high.
it's going to be designed for healthy people that don't see the need to go, but they
Like
just
younger
want
people.
catastrophic.
It was
Right.
designed for younger people is why they put it there. But now, you said there's a gold, there's a silver, there's a bronze, and then there's a copper. For me, I think to make it affordable, is there an aluminum plan? Because maybe
Nickel? No, it might be aluminum. Yeah, right.
yeah, we need
Iron.
to go a level lower, maybe a cheaper plan, aluminum, but the
Oh,
deductible is probably gonna be pretty high.
yeah, it'll just be rock
Tin
bottom plan.
tin foil.
It might be affordable, but then if you start to use it, it may not be as affordable. But the thing is, though,
Sure.
I look at insurance as insurance. So it's designed to protect you from going bankrupt if something happens. I'm going to consider getting a copper plan for my family because I don't qualify for the subsidies. So a family of five, my premiums, the cheapest, are probably going to be well above 2,000 next
Oh, yeah.
year a
You're in a
month.
position where you're gonna be paying the highest of anybody. As somebody who's self-employed or runs their own business, you don't have any employer kicking in, you are the employer, and you've got a family, you have to provide the health insurance, you're making, probably joint too much, to qualify for subsidies, so you're gonna pay through the nose on healthcare.
Right. And you think about a married couple in their 60s that aren't on Medicare yet. They're like, please get me older. This is like the one time you want to be sick, getting
Yeah.
older.
Yeah.
Um, Maybe when you're 18 and you wanted to drink, or 17, or 21 now. So the couple that's making 85,000 between just Social Security, if they're taking it, IRA withdrawals, they might have a pension. It's easy to go 400% above the poverty line. And now they don't get any subsidy. They might look at a copper plan and say, oh, it's a lot, it's affordable. But if they're not, if that's assuming they don't use it, right? We might have a $12,000 deductible. And it's like, well, what am I really getting? But at least it's better than just paying 12,000 out in premiums and not using it anyway. So I like the idea of having copper plans available. It's
Well,
better than
yeah.
going without. It's better
Yeah,
than
it's
going
better
without.
than nothing. Yeah, it's better than nothing, but it is still frustrating. Now, I want to point out that we're talking about the big increases you're talking about here, and what you're talking about are part of the subsidies for people who get it through healthcare.gov or the exchange. But I also have read that healthcare prices and health insurance in general is going up. So even those with an employer or on group
Yes.
plans and I think the number was 9 point something. It was almost 10%. They estimate the average increase will be 9 to 10%
Right.
on
For the
those
individual.
on those plans for the individual.
Right.
So
Which
there's
means it's 18 because the companies are usually subsidizing about half.
yeah, the companies subsidize about half. So yeah, you're right. It's going to be closer to 20%, but for most people, it'd be between 9 and 10% per individual. I don't understand how this is feasible, or I don't know what the word is, but moving forward, it's just going to be such a cost burden on the American people.
Absolutely, and everyone's gonna feel it, and now more people are gonna feel it when the enhanced subsidies are removed. You
Yeah.
think about it, though, from the insurance perspective, they're gonna raise rates not only because costs are going up, but also because they're anticipating a lot of people dropping out. They're gonna anticipate the healthy people dropping out altogether because they're
Sure.
like, "You know what? I'm out. Why would I get insurance when it's costing me,
Yeah.
more than my mortgage?" And I get that. Someone like me that
Yeah.
might say, "Oh, my kids are young and healthy. I'll go and get something else. I'll just self-fund." Now my premiums aren't going to that company, and so their costs are going up, and they're getting less income because people are dropping it. So they're like, "Well, we need to raise the rates for the people that stay on." So it's a vicious cycle,
Yeah.
and that's what's going to happen.
Yeah.
So that's why. Now, we're not addressing the real underlying cause of why health insurance is going up. That's and the idea that, losing the subsidies is causing it. No, that's not what's causing it to go up. It's it's just the subsidies have been putting some makeup on it. Now we're taking that makeup off and we're getting a real good look at this ugliness that's called healthcare. So,
Yeah. Yeah, it's
the other
overall, I
thing,
mean, what's needed is overall healthcare reform, but that's easier said. You hear people saying that, but that's
right?
easier said than done. I mean, the healthcare system in this country we know it's messed up and needs reformed. I mean, the
And
costs are crazy.
I think that taking away the enhanced subsidies is a good thing, even though it's going to destroy most of my clientele and me,
So you think it's a
because
good thing? Why?
I think it's a good thing because it opens up the curtain and says, "Hey, look at the real cost here. Let's feel the pain," and it will get a lot of people upset to complain to their constituents. The constituents complain to their representatives, who will then say, "Oh, geez, everyone's complaining about this. We need to address it." Because by putting the subsidy in, all you're doing is putting tax dollars in, and that's just you know you're just covering it up for kicking the can.
Mhm.
So I think this is going to really drive the narrative going forward, is to say, let's do something about it instead
Well,
of
it's
just
too bad though that it has to
throwing more
harm
money at it.
people. It's too
Oh,
bad
right.
though that it has to harm people in the people have to feel pain in the process, and especially when it
It's
targets elderly or seniors. That's where I have an issue, right? I
Well,
mean,
again, this is not Medicare. So Medicare people they're not worried about
right.
this. It's
Yeah,
the people that are under
this is
65.
not for people 65 and older, but it is for
Right.
people fit that 55 to 65, in between that window, where a lot of people are like, if they're either self-employed or,
Retiring
that's
early.
yeah, that's gonna, or they want to retire early, that's gonna make it tough. Yeah.
It does. It does. It certainly does. So that's why I want people to be aware of this. The other thing that's coming back, Tony, short-term plans, non-Affordable Care Act plans. So these were the old school plans. I had people on them all the time. Hey, I'm retiring. I'm 64 in 3 months, years old. I don't go on Medicare for another 9 months. What do I do? Oh, we can get you a short-term plan for 9 months.
Are you
And
talking
or
about Cobra?
no, no,
This
this is
isn't
outside of
Cobra.
coverage.
This
You,
is separate.
you you used to be able to just go to an insurance company and say, "Give me a 9-month plan," and they would underwrite you. They'd say, "Well, we're going to cover you, but you've had some heart issues, so we're not going to cover any issues with your heart." So if you had an underlying pre condition,
Yeah.
they could deny you coverage for that, right? Pre-existing condition denial, and people didn't like that, so they created the Affordable Care Act. And then in last year, I think it was, uh, under Biden, he limited those and said, we're not allowing those anymore. The most you can do is 3 months or 4 months. And so now there was no option. You had to either go on the Affordable Care Act plan or go without. And the short-term plans were gone, even for those willing to take the plan with pre-existing conditions. So, of course, in September, the HHS and the Treasury Department said, quote, "We do not intend to prioritize enforcement actions for the plans that fail to meet the terms of the Biden-era rule that limited short-term plans." So that's another thing that's been happening is not only are they and allowing the copper plans to be available to more people, they're saying, "Hey, we're not going to say you can't go for more than 4 months with a short-term plan anymore." So they're opening options, which is my preferred solution, is more competition, more options. Although for those with pre-existing conditions, that's not really helpful. They also said that they hope that the states adopt that similar approach and stop the 4-month rule. So right now, if you're, in Florida, we use the healthcare.gov, so they'll allow it, but each state can say, no, I'm not allowing short-term plans to go beyond 4 months. So it's going to be a state by state thing, which I don't know. I don't know if that's a great thing. It would be nice if everybody could get whatever type of insurance they want, but again, this is a big issue and there's a lot unknown. Something could change between now and I don't know when the last day of session of Congress is, how many actual days they have to make changes, probably another dozen. We'll see if they make a change to this, but at this point 2026 is going to feel pain. That's didn't wasn't that Mr. T and Rocky 2, Clubber Lang? What's your prediction? Pain. That's my prediction
Feel
for
the
the health
pain.
insurance
Yeah.
marketplace. Pain.
Oof. Yeah.
Yeah.
Tough one.
So,
But I think one solution, people are like, well, this is doom and gloom. What do I do? Having a plan in place, looking at, okay, I've got more costs coming in, and working with a financial professional, a trusted financial services professional. And this isn't an infomercial. You're here to educate and provide information, but you also provide that service to your clients. And if people have questions, they should contact you. They can write into the show, get a hold of you. They can go to, what is it, dolphinfinancial.com?
dolphinfinancialgroup.com. Yeah.
Dolphinfinancialgroup.com. Yes.
The issue, Tony, is that this is a lot of times financial professionals will say, oh, this is a health insurance issue. Go talk to a health insurance agent. And the health insurance agent will say, well, this is a financial planning issue. I can't help you with your taxes. And so it's like this limbo. And luckily for me, I have my health insurance license. That's what I started with years ago. And I kept it because I felt that people needed this. And so it's a very complex formula of, how do we show the income to stay below this cutoff point? Yet, how do we get enough health insurance to get us to Medicare? What is Medicare? What is the rules on that? And understanding the financial aspects and the health insurance aspects and how they're integrated here, it's very important that you're doing it. So when you ask your financial guy or girl, hey, what about health insurance subsidies? And they say, I don't know, that's okay. But you need to then dig deeper and find someone that does. Talk to the health insurance agent, maybe get them in the same room together so that they're communicating, or work with someone like a certified financial planner who should understand all of this. You should have an answer. It shouldn't be, oh, that's someone else's. If your accountant says, I don't know, or your financial advisor says, I don't know, that's not a good answer. They need to know this. And like I said, things are happening. Things are very fluid. I personally don't know what's going to happen in 2026 yet. We won't know until November what the real deal is.
Yeah.
But I'm hoping that people are alerted to this and are paying attention, because it's going to drastically change plans for a lot of people. It's going to change retirement strategies. So give me a call or go to dolphinfinancialgroup.com and I can talk to you about your situation no matter what state you're in. Each state's got its own rules, but generally speaking, the health insurance subsidies are a federal thing, the federal levels. Yeah. So not a good thing, Tony. Not a good situation at all.
Well, the minute you say, oh, we're going to talk about health insurance, negative conversation. It's never going to, I've yet to have a positive conversation about the state of the healthcare in this country or health insurance, healthcare costs. We need a complete reform of the healthcare system. Yeah,
we do. And it's a huge, huge factor for retirement. So I'm on top of it, but It's easy just to shake your head and say, I don't care, nothing I can do about it. But I think we're going to see some movement from the constituents once they start seeing this price go up.
I
When
would
you
hope so.
see
I would hope so.
a 100% increase, a doubling of your healthcare premiums for no fault of your own, you're probably going to pick up the phone and complain to somebody. So, Tony, you want to give everyone your phone number so they can call you and complain?
You know what? I'm not going to do that, actually, but they should instead funnel their energy, complain to their complain
Yeah,
to their
representatives.
representatives. Yeah,
Yes,
yeah,
yes, indeed. Or Tony, either way, you can complain in the notes.
yeah.
In the on the YouTube, comment below if you want to complain to Tony because he reads those comments. All right, we'll end there. Tony, thanks for a good show. We'll catch everyone next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.